Hello, hello. Welcome. Thank you for joining us today. Let's get started by having each of our panelists introduce themselves.
Hi, I'm Howard. I'm 52, tail end of my life. I love Dublin because I can bet on stocks and sports and have a beer in the same place. America's really trailing when it comes to FinTech. But I was born in Toronto, 2 kids, 2 dogs, 1 wife. I live in San Diego and Phoenix and New York. I live on a plane. And I'm an investor in financial services companies through our fund, Social Leverage. I was the founder of a company called Wallstrip that was acquired by CBS. It was the first show ever acquired, first YouTube show ever acquired by a network. And then I started StockTwits 10 years ago, which is now in North America the largest social network for traders and investors. And I'm an investor in eToro back in 2010.
Cool. I'm Yoni, Assia. I'm the CEO and founder of eToro. We're the largest social trading network where we have over 10 million users from 100 countries who trade stocks, commodities, indices, and cryptocurrencies. And everybody can basically see, follow, and automatically copy the top traders on our network. I have no dogs, married plus 4 children. So that's more complex than 2 dogs. And from Israel.
So this year's been a pretty interesting year because we've seen crypto platforms look a lot more like traditional institutions with Coinbase getting all of their proper licenses, et cetera. And we've seen traditional institutions start to look more like crypto platforms with eToro supporting crypto and Robinhood supporting crypto. What does that trend look like going forward in 2018 and 2019? How are traditional institutions going to be embracing crypto products and crypto assets?
I look at the world in a very North American lens. Yoni, I'm lucky to be able to WhatsApp and talk to Yoni and get his insights when I need them for the rest of the world. They're in 140 countries. I'm an investor, obviously, from StockTwits. We're very much North American, and then Robinhood, which I was an angel investor in, is very much North American. So I'm excited about crypto. Yoni is really the expert, and truly in the sense that in 2010, when I was looking at investing in eToro, he was like, "What are you doing? You should just put that money in Bitcoin." So I really should have just listened to him. Although I think my money would have been lost in Mt. Gox anyways, and I'd be more upset. But what's exciting for me as a stock person, United States is very stock market oriented, not so much crypto and not so much Forex. And for whatever reason, it just is. And what's exciting about crypto is the things that it's going to bring to markets 24/7, fractional ownership. I should be able to buy $50, or my kids who are millennials should be able to buy $50 worth of Amazon every week. And this kind of technology existed for the institutions. It's never been created for the retail investor. And and this next generation, what's exciting about it is this next generation that Uber's, Netflix, YouTube, Red, on demand, they should be able to build portfolios on the fly. They should be able to talk in small groups and decide which stocks they want and be able to manage their own money. And this is the trend that is really just getting going. And crypto just accelerates that in the United States, but in regards to crypto, I'll let Yoni chat.
I think we're seeing 2 very interesting things. One is on the technology front. So when we connect to various exchanges and liquidity providers and prime brokers, so since I'm a computer programmer, you realize this entire industry is completely fucked up. And this is new technology that's going to replace the entire technology stack of the entire financial services industry, period. Whoever is into sort of the technology stack itself understands that the blockchain technology is going to completely transform the equities and the entire sort of trading and capital markets industry. The other thing is user demand. So the biggest and hardest thing for any consumer-driven fintech company is to bring in clients. And what we've seen last year, we've seen like customer demand sort of grow insane due to crypto. So we are one of the only regulated financial institutions in Europe which enables you to buy with fiat cryptocurrencies. And while we were doing this since 2014, only about 2% of our users until early 2017 traded Bitcoin. And then, well, we did add Ethereum on time when it was $8, but that just blew over to more than 80% of our users now actually trade cryptocurrencies as well as other assets. And we've also seen a lot of our users actually come in to trade crypto and then sort of start buying stocks. So I think it's really driven by a lot of consumer demand, a younger audience. Actually, we've asked this question to our customers. For a lot of our customers that are sort of Generation Y, this is their first trade. So their first trade in the world is actually a crypto, not stocks.
Yeah, that bugs me, but it's the reality. Like in the U.S., you know, Robinhood finally brought stocks back to being cool. You know, when especially around FinTech, Yoni's been talking about this since 2010, where it's 8 years later. So FinTech moves at like speeds that you really need to be patient. You know, tech moves the way tech moves, networks grow, network effects, but FinTech just defies all adoption curves. And it's a game of attrition in this space. And you know, it's amazing. It's exciting that kids' first trade should be Bitcoin, but it's amazing that I've traded for so long and I still don't really care that much. And it could be because I'm live in the States, but it's just not interesting to me yet. I'm so bullish on certain parts of crypto, but it's not that interesting yet. There is money being made. You're making a fortune. We should be interviewing you, but there's so much money to be made off regular equities, as we're seeing in the NASDAQ.
Yeah, but there's a difference. Like for you, 40% gains a year is woohoo. He's talking about 40x in 3 months. It's like the different things.
No, so
interesting for
so
different
this
people.
next generation we're brought up with expectations that also aren't going to be able to be kept. But what's exciting is that, you know, the older, you know, the people that are my mentors that are 60 years old, and they're like, oh my God, you're insane. Like, and I'm trying to make 40% a year. And we're looking at the younger kids who are making your type of returns and going, you're insane. But the point is, we keep seeing these adoption curves because of now decentralization. We're seeing these adoption curves that are, that are global. Bitcoin is, in 7 years, built a global brand with no employees, basically, and no hardware, and they don't have to do ergonomic support for their engineers, and they don't have to deal with like work from home. It's just Bitcoin. It's a global brand that's touched billions of people. And, you know, that's what gets me excited, is that the longer it just stays, you know, the more, even at the minimum, it replaces gold. And that's still a huge opportunity, because I never understood gold. I came into the world like thinking, what's you idiots trading gold and hoarding gold and putting it under buildings and in your safety deposit boxes? I never understood that. So at least crypto makes sense to me because I'm in the middle. To my kids, I'm trying to just get them the idea of saving and investing, and that they can do it themselves, and that's exciting. And that's what we're trying to do, is get this next generation in control of their money. It's a language, and now there's tools to help people understand the language.
Yeah, I think part of that explosive growth on the crypto side comes from there being no barriers to entry. And, you know, the idea of custodianship, cryptocurrency kind of throws a little bit on top of its head, but one person can build a wallet, deploy a wallet, and now they have an asset management platform effectively. Coming at that from the opposite direction, from a traditional way, how much barriers are there to launching an eToro or Robinhood, you know, and doing it regulated?
A lot. I think that the traditional regulated financial services space has huge barriers to entry due to both the local aspect of it, the local aspect of compliance and regulation.
Yeah.
So every place you set up, you need to set up shop, you need to get the licenses, you need to get regulated. Everything you do, you need, you know, a lot of times, you know, compliance people and sort of legal counsels to walk you through the process, where in the crypto space, it's sort of launch and learn, launch and learn, launch and learn. I think that's also why a lot of people are criticizing the crypto space, because it's a bit Wild West. Maybe too much launch and learn, maybe launch and learn on top of the end investor, but that's a very big difference. So here you're coming in, there's a prescribed set of rules, they're very clear, the first thing when you set up any regulated entity anywhere is you need to hire these 3 people, 2 of them compliance and FinOps. So the barriers to entry connecting technology and traditional regulation are much, much higher than crypto, where all you care about is technology. You just build the technology, and the rest sort of follows.
Yeah, I think, listen, I started doing this in 2007. I discovered Yoni. It comes down to like Twitter. In America, 2007, the Twitter moment that I understood, and when I got excited about social networking, was Twitter was the future of news and therefore should have been the future of trading. So when I saw Twitter, I'm like, why isn't there Twitter for stocks? Why can't, when Yoni or Mark Andreessen or somebody smart talks about a stock, I should be able to click on that link, open my brokerage account, trade, share that trade with my friends. Kind of that's what eToro's, I didn't know eToro existed, but I was looking at Twitter going, that is hundreds of billions of dollars of easy money. And Twitter went the media route, right? So we started StockTwits, and now you can trade from StockTwits through Robinhood. But I had to wait in the US. The difference is in China, gray means go. In the United States, gray means get the fucking attorney and 3 people, and hopefully no one knocks on your door to put you in jail, because they will do that. So that's what makes FinTech exciting, is we're finally at the place where I believe eToro and Robinhood have gigantic moats. If this was any other industry, there'd be 50 Robinhoods, and there'd be 50 eToros already. But right now, if you look at eToro and Robinhood as eToro for the rest of the world and Robinhood for North America in terms of transaction, Robinhood doesn't have a social network or social trading, again, because of the regulation. We are at day 1. That's what's exciting to me about stocks and markets. Blockchain, yeah. Crypto, it's like a mood ring to me. It's like you're globally trading against other people. It's going to be here forever. I totally get it. But I'll leave that to better experts who understand technology. But we are talking about day 1. I can't even, in the world, Amazon will never split their stock. The last bubble, stocks used to split every week so that they could game the market. Amazon will never split their stock because it makes no sense for them to split their stock.
They're fractional stocks today.
So what makes sense is fractional ownership, and that is, it's unbelievable that that doesn't exist in the United States at scale. So we have so much more to do before even crypto even gets a guy like me excited. Meaning, I'll invest in this stuff, but there's so much work to be done just letting people own shares of great companies with cash flow before we get to the great stuff that you guys are working on.
So we've talked about some of the dividends of embracing crypto products. What are some of the downside risks that institutions need to be looking at? And how does eToro manage some of those risks?
I think the biggest risk is compliance and regulation, probably also around anti-money laundering. I think that's why there's also potentially there's going to be a long time before you're going to see traditional banks offer crypto assets for their clients. I guess it will happen sometime. When you're a traditional bank, you'd go and you say, I want to buy Bitcoin, and you'll be able to buy their Bitcoin. But the risks of, it's a different custody process. It's a different, so the counterparties are all not the traditional counterparties. So credit risk, compliance risk of anti-money laundering trail that nobody can really get a handle of. Suddenly you can find out that you got Bitcoin from somebody who got Bitcoin from somebody who got Bitcoin from the wrong person, but everything is trailed. So actually it's better tracking, it's better technology, but maybe it makes you more liable. So a lot of these issues are complexities that basically sort of force traditional financial institutions out, because all the paradigms of how you calculate your risks, they're all different in crypto. So that's the biggest challenge. It's risk management. Financial services is a risk management business, and this has a lot of risks, and they're all completely different than your traditional risks in a financial institution.
What about technical risk, like hard forks or?
I think that's operational risk. I mean, for us, for example, forks and cold storage is a very good example. So the custody risk that you take when you build cold storage and you build sort of the entire way of creating things that are not connected to the internet, but you need to sign transactions and then move them, and cyber risk. But more than that, when something forks, so this is just for the audience to understand, you suddenly have some code from China that is very complex to actually do code review, and you need to run it on your private keys in order to actually get the coins from a fork. That's an insane cyber risk, unless you put in a lot of efforts and resources to actually do that in a separate environment. So those are type of cyber risks that simply don't exist in the traditional financial services industry.
And do you have to deal very much with with customer support from, let's say, exaggerated movements in the crypto market? I mean, there's kind of a kind of tongue-in-cheek approach to this within crypto of, you know, to the moon or massive one-time losses.
I think that's very Generation Y, sort of live life through unrealistic expectations. I have another industry that would fit that statement, but I think, like, you know, you can't really expect to make 40x in all of your investments, right? But you're 27, so you do. I mean, you wouldn't even imagine doing 40x
I'm in the idea of
investments,
preserving
right?
capital, not taking exorbitant risk. So, again, it's a generational thing. I think a lot
I'm
of this
somewhere in the middle. I'm like 5x, that's fine. 40x, 5x, 40%.
I think a lot of it too, unfortunately, again, is a lot of it is behavioral. Is like depends on the environment you grew up in, which is your risk. You know, the thing that's exciting about this era is that I never was interested. You know, as an American, I was born in Toronto. You didn't have to learn. I was forced to learn French. We had to learn Yiddish. I went to a Jewish day school, Yiddish, Hebrew. I mean, I wish they just taught me the language that mattered. The language that mattered was understanding markets, because it's a global language. I can be in Tuscany trading crypto, you know, using a Telegram or StockTwits.
They teach that at the synagogue, Howard.
Yes. So it's a very secular thing, meaning we need to teach this next generation. It's a very freedom-based thing. So the technology matters, the hard fork and all this stuff, and the security and the trust that goes into it. But we are not educating people with the power of this language, which is the language of finance and markets and money. And that's what's exciting about crypto. It's just forcing people to, like, participate or be left behind. This is really the joy of it all.
So what's the opinion here on ICOs and creating new financial products via crypto?
Well, I don't begrudge it. I'm the old curmudgeon and going, I wish I was, you know, had participated more. I'm very much for it. I'm very much for buyer beware, but I'm also very much in the world of the United States, so I'm very much for regulation too. I think there's plenty of regulation. We've got to enforce the regulation. That's generally been the problem in America. It's got plenty of rules. It's just everybody's breaking them and no one's enforcing them. But I'm all for open markets, and you know, if people want to blow their brains out stupidly, not understanding the technology and trading, go ahead.
Let me expand the question a little bit. We'll include tokenization of existing financial products in that too. So
very, very optimistic, because Yoni is very optimistic. But we just invested in a company called Rally Road, which is doing IPOs for collector cars, right? And they don't need to be in the blockchain in the U.S. People are, if you trust the brand and you can own a piece of a car and get some liquidity and trade it every month, that's an asset that could be tokenized, but at the same time doesn't need to be tokenized because the world doesn't need that yet. But so I'm for it, but I'm also saying, like, there's just a process that has to happen. And I think in the United States, consumers will drive, the customer demand drives that. The banks aren't going to move until everybody forces them to move, right? Because they have these regulations that protect them. Same thing with Facebook. This whole Cambridge Analytica thing, whether it happened, didn't happen, when it happened, it only helps Facebook because they have the money. That's a better moat for them. All these problems create better moats for them. And the banks have had that benefit for hundreds of years. So, that, you know, you got to work within that framework.
So I'm, as Howard said, I'm more optimistic. So I think we're going to witness the by far biggest transfer of wealth in human history. We're going to see in the next 10, maybe I'm too optimistic, 20 years, basically most of assets, most of financial assets move on to the blockchain. I think when our generation grows, Generation Y, we will all expect to be able to take our mortgage and say, I want to move it now to my wallet, from my wallet to a different place, any single financial, it's going to be a feature of every single financial asset for me to be able to go to the financial institution where I bought it and tell them, now
I agree
move
with that.
to
Switching
me
costs need
the
to come down.
financial asset, and I can decide where I want to keep it, if it has custody, if I'm paying for the custody, if I'm custodying it, or if I'm moving it to someplace else. I'm going to be able to send it to any one of my financial assets, move it to my friends, whether they're in Asia or in Europe or in the Middle East or in the US, and the same will go for central bank money. So we're looking at a process where the technology itself of money and financial instrument is going to become digital native, and that's a that's $100 to $200 trillion that are going to move into this technology, which is why I think it makes sense for a lot of people to deal with this technology. Because if you're 1%, if in the next 10 years you'll take 1% market share, 0.5% market share, 1 pip market share, that's in the billions.
So what are the best companies, big companies that people could buy tonight that help them as that 100 trillion moves on, let's give people some information. What should they own as a poor man's play or as a scared person's play on this transformation, and what's an aggressive way to play this transformation?
So first of all, buying crypto is a very good play in that transformation. So when everything becomes blockchain assets and crypto, everybody will remember Bitcoin, because Bitcoin is the first, it has the brand awareness of Coca-Cola and Apple. So Bitcoin will, in my opinion, stay sort of the symbol of this entire sort of revolution, like GE was for electricity, right? And still exists today. So that's Bitcoin. It's like the GE. Then, of course, you have Ethereum and others. There are no public companies to buy.
But what about NVIDIA or Google or?
I think NVIDIA and AMD are good plays. They actually spiked just the same as crypto. So I think both of them had like a 400% increase in price. So there's a question of whether it's priced in or not.
People need to be able to have different. I try and teach people there's different ways to play these.
I think,
trends.
by the way, the internet companies are a good play, but not a directly correlated play.
No.
I think something that is missing. There aren't any big sort of the future of blockchain, the future of crypto markets, public companies yet.
Yeah.
And I may have missed this from your question, but what's the timeline for this 100 trillion?
I would say it's 10 years, but that's what I said in 98 for the internet as well, and it took 20. So maybe 20 years, and maybe this is FinTech, so it's worse because it's people's money and there's regulation. Maybe it's 30. But I would guess 10 years we're going to see 100 trillion on the blockchain.
Well, you heard it here first, 100 trillion in 10 years. Thank you, Yoni. Thank you, Howard. That's it for our panel. Thank you for coming.